to another live stream here. Sorry I was 30 minutes late because I was caught up with some stuff in real life. I hope you guys have been having a great week. If you watched Wednesday's live stream, you should be smiling really nicely right now because I did caution you guys big time about the potential possibility that we rally and then reject that massive level up there. And that's exactly what happened after that. Concurrently, 2 days of bleeding straight and into the open today, we are already down with SPY at 383. Now, obviously, I had some puts that we took together with the Discord community, and we've been riding down this wave pretty hard in this past week. So a lot of members have been making profits, as well as playing some bullish plays on Tesla yesterday, and then we also have some other trades that kind of were thematic in terms of the opportunities that were presented. Mainly, most of this week has been kind of dull in terms of price action, but volatility is finally back up, and so let's cover the market, and hopefully it is helpful for you guys. Gonna go through the there's not much to go through in the macro standpoint right now, apart from the fact that you need to know that next week is FOMC and the market is pricing in a large chunk of a possibility for almost a well, 75 basis point is pretty much on the table already, but now we're pricing in a possibility of 100 basis point, which is coming to about 33% right now, according to the Fed funds futures rate. So that's mostly what you need to know about the macro side. In terms of that, gold has broken down below a key level here, and I did mention about gold breaking down this support and how I would want to possibly take a bearish trade on gold. I need to see a quick buy up on gold to retest the 156, 157 level before I take a bearish position here, because it has been selling off pretty violently, and we don't want to be chasing to the downside here without any confirmation. Financials were popping off a little bit yesterday, but then weren't able to really follow through with momentum. As you can see, XLF kind of popped on the red day, but you know what, we didn't really see any follow through, and so therefore that has reverted back into a downtrend. Even a sector like XLV, which was healthcare, saw a little bit of pop and then dropped pretty much the next day. As oil with the fake out rally into 148 on XOP, and now coming down, probably looking for a short entry here back down into 135 for that double bottom retest down here. So I'll be looking to enter a bearish trade sometime maybe today or on Monday, depending on what I see as the opportunity. One thing that we have to be cautious here is the VIX, and the VIX is almost approaching the 28-29 level, which is the third alarm, right? This is a third alarm. Remember, the VIX has 4 upper alarms. The first alarm is 24, then is 26, then is 29, then is 31, 50, then is 35, and these are all of the levels at which the VIX goes increasingly heightened and increasingly in that zone where fear is mounting. So that's what I personally would caution you guys to look at. Now let's talk about SPX or futures, or let's just look at SPX to begin with, right? We've broken down below 3,900 and then the 3,910. We melted far below that. The next stop here for a potential bounce is going to be at 38.25, which pretty much, I think by the open we'll probably be there already. And then when the market opens, we are likely to see some kind of a bounce, perhaps. I don't know if there'll be a bounce, but OPEX is certainly making it such that it's becoming very difficult to predict. However, we did see, since there were $3 trillion worth of options that were expiring today, we did see a lot of that long-winded options roll down. In fact, a lot just on the flow from our Discord, we were looking at SPY puts that were wound down from 376 into 372, and so on and so forth. So there was a lot of flow here that was pointing towards downside movement. And this flow has been wound down from multiple strikes. So you could see, a couple of days back also there was additional strikes for SPY, and they were kind of, just betting higher strikes like 380s. And now they've started to wind them down even further. which shows, you know, that they might be taking that positioning and kind of winding it down into lower strikes in anticipation. So that's one thing to keep note of. So yes, that's something. Now, what are realistic expectations? If we do break 38, what is this, 38.25, right? Then down we go back into the 36.50 to 37.25 range. Now, I did mention that this is the third wave in the Elliott wave sequence. Remember, first wave, second wave, and this is the third wave. The third wave typically is the largest wave in any Elliott wave sequence. And if we were to look at exactly where we could really go, then, you know, the lowest possible region is this dual zone right here from back in October of 2020, September to October 2020. This was a level at which both the support and resistance were existent. Now, SPX fair value estimate is at around 36.50 to 37.25. So I would be expecting a pretty deep bounce at this level, obviously. But eventually, if we do get that bounce, we could actually eventually fall back into the 35 to 3600 level. That is obviously a long shot, and as I mentioned in the previous live stream, I don't want to fear monger, but this is just a realistic expectation that I'm putting in front of you guys based on price action right now. If things get way out of hand and we get through in this like really crazy fanatic frenzy vibe, then that's what's going to happen. The market's going to sell off exuberantly. It's going to be a quick sell-off, okay? And that could happen sometime next week. You don't know, okay? Not to mention, the Fed is not going to help the situation. It's going to exacerbate the situation, make it worse with their the rate hike next week, and it's going to be all dependent on what they do, right? If they do a 75 basis point rate hike, then the market's probably more receptive, you know, to being understanding. But then if we see the Fed do like a 100 basis point rate hike, then people are going to start to freak out again, right? So that's one of the things you got to keep in mind. And you know, if that is on the table, then, you know, we are going to see a lot of fear in the eyes of traders and institutions. Now, one thing that you got to also keep in mind is we haven't really seen much unwinding of positions from institutions, and that's actually pretty scary, right? And I did mention on Wednesday, we had this upward trending line here, which we have now broken past, right? The 3900 level was the key level that was holding us in this kind of upper, you know, higher high and higher low situation, right? But now that's not the case anymore. We're now broken down once again, and this now is the beginning of another wave down, right? You have to look at it objectively, see? When you're looking at a trend, right, you have high, high, then lower high here, lower low, lower low, lower low, lower low, right? Then we made a higher low, but then not a higher high. We didn't go further up here, right? We are rejecting here, and now this trend line that was keeping us within that uptrend to form that higher high or the higher low is now no longer there unless somehow today we squeeze back into here all the way back up, okay? Which I don't know if it's going to be likely, but I think it's unlikely, okay? Obviously, there is a possibility that we get squeezed and then we go all the way up there, but in my opinion, very, very unlikely. Therefore, if you're looking at this objectively, then this is the setup for a much bigger wave down into 36.50, 37.50, right? Just strictly based on price action technical analysis. What actually happens is a different thing completely, and that's why you have to obviously look at it pivot by pivot. That's the reason why we trade pivot from pivot. We don't try to, you know, predict and say, oh, this is where we're going to, but I'm just giving you guys entertainment. I'm giving you guys these levels so that you can understand what we look at. What are we forecasting based on, right? If you're looking at technicals, that's what you're looking at. But however, after this wave down happens, then that's the right time to enter long for that end of the year rally, and based on the seasonality that I spoke about in Wednesday's live stream. As I have already mentioned this, like I feel like 10 times already, this in September is the last drop of the year for a midterm election year. And then after that, things start to go plateau sideways until the mid-October, and then in mid-October is where the rally starts, and that is usually a very strong rally into the end of the year. So therefore, if you look at all of the signs that are pointing, we get a big sell-off event, exuberant sell-off event, back down into this level here, and then we start to buy up after that. That is your level to consolidate long equity positions and leaps, okay? So keep that in mind. I will be personally adding a lot of equity here. I got about $300,000 to allocate once we come down into this region. So definitely that's the region where you want to look out for. Okay. Okay, great. FedEx is also down pre-market here at 160, and then the CEO came out saying that the economy is going into a slowdown. That might also spook markets a little bit. One potential short opportunity that I really like is SNOW, S-N-O-W. Very strong uptrend, but then with the market pulling it down, this would present a really nice risk-to-reward ratio to the downside. Another one is Tesla, right? Really nice risk-to-reward ratio from the to the downside perspective. So Tesla could easily drop back down into the 290s, or even, you know, if things get really ugly, then 280s, right? So that's you know, really important to note as well. Obviously, some of these stocks are breaking down key levels here, and you know, that's like a stock like Amazon, which had been holding this level for a heck of a long time, 126, and now has gapped down to 122. So probably gonna come down to 117, 118 level to retest this high of, or rather this dual zone right here. And if it loses that, then it's gonna fall all the way back down to $100, and you know, that sounds a bit scary. AMD. Now, semiconductors is one of the sectors you have to be cautious going short on, because this thing has already been overkilled, right? So I don't think there's a lot of like super downside on semiconductors, but then if the market starts to get irrational, then AMD could come down and retest the $71 here, and that could get nasty. If it really breaks below 71, hallelujah, AMD is going to go all the way down to $59, $60, which is going to be pretty crazy, all right? And obviously, I will be buying AMD if it gets down there, right? Same with NVIDIA. NVIDIA breaking down, it can still bounce at the 120 level. It still has a demand zone here. But if it breaks down below that, then, you know, you're looking at all the way down to $78, or this range here between $70 to $80, which is the dual zone for NVIDIA. So you're looking at far drops if really they break all of these. That's the reason why I say the risk-to-reward ratio for semiconductors to the downside is no longer really that attractive. You want to stay away from shorting semiconductors in this market right now. You want to look at the stocks that have been rallying, and especially the growth tech stocks that have high beta. Those are the ones you want to go after, because they'll be most susceptible to pullbacks in this kinds of conditions. Not to mention Meta is also another one, which might be interesting. Okay, so if you guys have any questions, post them in the comments right now. And of course, if you have any tickers that you want to request, go ahead, put it in the comments. Google is also another one that I was watching that has broken a key support here. It has another minor support at $99 or $100, but if it loses that, then Google could also fall pretty densely down into $86 to $90 here. So that's another one which I would gladly pick up more shares of. By the way, thank you so much, guys, for tuning into the live stream today. Truly appreciate you guys. Remember, if you're the first time here, drop a subscribe and drop a like for me if you can. Dropping a like helps this stream reach a broader audience, and I really truly appreciate you guys doing that. If you can take the time out of your schedule or your day to just click the like button, I would truly appreciate that. Anywho's, 15 minutes to the market open. I don't see any questions, no comments or anything like that. So I super appreciate you guys being here. We'll be back on Monday again for another live stream. I did mention Monday will be the only live stream that I'll hold next week, because on Tuesday I'm actually flying off to Phuket, Thailand. Now, I may hold live streams in Phuket. However, it may be different format, and I may hold them on Instagram instead. So if I do that, I will post it on the Instagram and keep you guys updated. That would probably have like a screen, like maybe just me holding the phone kind of thing, that kind of vibe. And then give me your feedback, if you maybe like that one better, like those kinds of breakdowns better, or anything like that. Maybe I'll do like a short 5-minute breakdown of the market, and keep it simple and easy, but then 5 minutes might be difficult. So maybe I'll hold a live on Instagram. That might be also a possibility, pre-market, and then if it's possible, I'll do that, because I don't know how connection will be, like how spotty it will be. Maybe it may be easier to stream live on Instagram than it will be on YouTube. So I'll find a way to reach and give you guys updates on the market for sure based on what I see. But after this downward move, remember the market's going to take some time to digest it. So I think you know, the planning for my holiday came at no more than a better time, because I feel like you know, it would be a great opportunity for me to go off when the market's going to be moving sideways. So I will be enjoying my holiday in Phuket for about a week, and I will show you guys some of the sights and sounds of Phuket when I go there. So I'll post it on our IG stories so that you can have a look as well and go along with this holiday that I'll be on. All right, guys. Well, that is going to be the end of the live stream today. I'm going to keep these short and sweet. I appreciate you guys once again for taking the time out. Consistency over everything. If you've been attending these live streams, you know, I only hope that it has been beneficial for you. And so I will see you guys next week. Take care. Peace. And I love you all.